Hey everybody, and welcome to Stock Abilities. Today I'm going to be covering Tesla. I planned on covering this a little while back, but I wasn't quite sure if I was ready to consider shorting yet, and apparently holding off was a good idea. As you can see here, it's pushing into nearly all-time highs, and historically, however, it does not hold very well, so I'd be very reluctant in buying shares up here at the peak. I would be considering puts and or shorting very soon, maybe give it a day or two, see how it tests all-time highs, and go from there for swinging on a downtrend. And I'm not necessarily bullet or bearish, I would say, on Tesla, but on the shorter term, I would say that it would be a very unlikely outcome to see this pushing to 400 or even 500 into the end of the year. There's much more of a chance of a downturn than an upturn. And I'll be getting into that, so make sure to like this video, share your comments below, and share this video as well if you want more input on Tesla or if you want additional content and things like that. So I'm going to jump right into it here. That it's currently trading at $381.50, kind of pricey end. And in the previous years, it hit over 383. These Google charts aren't exactly exact, but I just wanted to keep it simple for you guys. And it's pushing very near the all-time highs. There's a lot of benefits to investing in Tesla, but you got to treat it as a long-term stock and not as a short-term. And as they are highlighting here through Yahoo, that it's hitting highest close in nearly 2 years, which is obviously not the most bullish factor in regards to trading with Tesla. There's something that I personally like that made me turn from more bearish to bullish with Tesla, but it's more of in a long-term sense that they recently acquired essentially a car insurance that they'll be offering directly, and they claim 20% lower rates, and in some cases as much as 30%. And they're going to expand slowly, but there's no real timetable. Now, this was earlier in this year. This is April of 2019. For 2020 coming up here, and you have the Tesla Cybertruck that came out recently as well. And although people could say it had a bad presentation, and the whole idea was a viral attempt to get more attention to the truck, and it clearly worked. And they got more exposure without actually paying for it because they did the presentation similar to Apple's presentation where the phones weren't working, and it was all basically a staged stunt. For anyone that believes that it was not, they should watch Apple's previous presentations in association, and they followed the same kind of formula as Tesla here. So both on the insurance and on the new vehicles, the vehicle itself is actually decent quality for the price that you're going to be paying. The problem that Tesla always has is that they're using a lot of essentially shareholder value rather than actual value that they're bringing into the company. Their overhead and debt is kind of ridiculous through their productions of the trucks and through other vehicles and just previous debt that they had. They barely scapegoated in the recent year or so, essentially paying in cash to keep their company alive, and then they had some bad press like the 420 secured Tesla type of thing going on. So it's kind of an iffy point to be considering long-term investing, at least at this high on Tesla. I would wait for a significant drop again before you consider it, and I'm assuming it's going to happen either by the end of December of 2019 or early into next year. And then once you get close to the 300 range, if you're considering long-term investing, that might be a good area to start out. And I know that sounds pretty low, but Tesla does have rather huge moves. And just some other things to highlight here is that as for the hiring slowdowns, some Tesla investors tell you that the signals that this electric vehicle company is in good place, manufacturing is under control, and supply is meeting demand. This is a scalable long future place to be. And it's historical issues can be seen as positive as well. They're cutting down their overhead, so they're sort of trying to progress towards that. They've had some updates with their solar and some other things that they're doing, and they have this new VR tech that came out recently that looks promising. But once again, that's more overhead that they can't necessarily afford to be doing in the first place. But it's worth highlighting that that is something that came out that they're trying to progress towards in the future. It's We'll talk about that in a separate video, but I just wanted to throw that in there in this video. And recently in 2018, they actually turned a little bit of a profit, but they're still struggling to maintain essentially a steady profit, at least in a valuation sense, that they're trading at ridiculous highs through essentially a euphoric hype that can't really necessarily last forever. Now there's companies like Apple and companies like Amazon that are trading at ridiculous valuations, but comparing Tesla and Amazon, that's two big different companies. Amazon has lots of room still for expansion, and Tesla is just one niche. Now they're trying to expand into further niches such as the VR, virtual reality, and then with the insurance that gives them an extra boost of valuation. I could see in the coming years, maybe 2021, 22, or so on, that they might be trading at $500 a share or more, because there's a lot of value in the insurance aspect that people don't realize, and that could supercharge the hype aspect of it and also bring them into well above profitable margins. But right now, they're still struggling a little bit to keep the value up high. They're still making a lot of monies, but they still have a lot of overhead as well. And how they're going to end up maintaining all of that cash flow and everything. It's brings it to one simple thing here, that essentially they either going to have to pay the debt that they have in cash, which they did recently in the last year, and then going a little bit further, that the only way to fund the position is through ever increasing share equity or long term debt raises. So they have to continue to maintain the hype and use the valuation of the shares to keep afloat their company, and then they take that valuation out. So essentially, their shareholders are in a way keeping their company alive, but at the same time, they're leveraging their debt by taking out other loans and other things like that to try to keep the company going so that they can make it past the hump of the ever exceeding debt compounding that could, in theory, bankrupt them completely. So, without the insurance aspect, I was quite bearish. But with the insurance, I've seen companies in the billions of dollars of debt turn that around into a lot of profit and a lot of growth in the future. So, just utilizing just the insurance aspect alone, there's a lot of monies to be made now once as they're sort of seemingly getting their productions more steady, and they're sort of keeping their kind of flow going in regards to a long term sense. There's a lot of promise for Tesla, but the issue is I wouldn't be considering uh, for the share price anyways, as this is a good ideal investment point. I would say to wait a little bit. Now keep in mind I am not a financial advisor or anything like that, so you can use this input to your own purposes for whatever the reason, but essentially I don't feel it's a good idea to invest, at least at this peak, at this point, when it's testing all-time highs. A very dangerous point. Now if you're scalping, possibly. If you're swinging, maybe, but in a long term sense, this is not a good entry point. Now, if you're holding it from a while back, maybe considering trimming your position and adjusting it, and maybe hedging with puts or something like that if you want to hold it for the longer term with a projected valuation over $500 a share. It might be a good idea to consider something like that. I have a Patreon if you want to consider that. I have different tiers here, 5, 35, 60, and you can read all about them in the actual Patreon page. But essentially, to keep producing these videos and things like that, since Google's changes to the YouTube AdSense policy basically means that you can't generate ad revenue unless you have over 4,000 hours of watch time in the given year. This is still a small channel, so I generate zero revenue doing these videos, outside of maybe the occasional affiliate link sign up and things like that. But helping new subscribe to the channel and like this video, commenting on this video helps as well if you can't afford the Patreon support. I'm also going to jump right into it here, that I have a Discord chat that if you want to check it out, it's free for stock traders and freelancers and things like that. Post a variety of alerts as well as stock news updates and things like that, both on the stock channel that you're listening into and through different alerts on the Discord channel. I also have a freelancer section if that's something that you'd be interested in as well. You can check that all out in the description below. Thanks for listening in and have a great day. And I'm going to kind of show a little suggested videos here, so spend a second and take a look, see if any of them are interest to you, and see you later on.